Stephen, is it fair to say it's the best of times, the worst of times at the moment, in that we are starting to see signs of market recovery, but there are very much cautionary notes that we need to be aware of?
Yeah, I think that's fair. I mean, the offshore industry and the OSV sector have been through its worst downturn for 30 years. We have nearly 30% of the fleet laid up. We have rates at OPEX. We've had that now for 2 to 3 years. So this is a serious, major, significant recession. While we do feel that the market may have bottomed out, and certainly there are a number of indicators that suggest that may have taken place, I think it's still right to be cautious about the major structural challenges that we face. And across the offshore industry, some sectors may improve a little bit quicker than others. We may get windows where the markets do better but then fall back again. I think for many owners, and indeed their relationships with the financiers, this is still survival mode, but perhaps looking a little bit at opportunities that you get at this point in the cycle. The market has stopped getting worse. It's hit the bottom. This is a time to survive, but also to look at opportunities.
You were telling me that you surveyed 30 investment banks and they all had numbers that were lower when it came to oil price forecast than they are today.
Yeah, that was an exercise we did towards the end of January. I think the current price is $68, $69 for Brent. The consensus across this range of forecasters was closer to 60. And I think there's a number of factors going on there. We have had a lot of outages, places like Venezuela, the Forties pipeline. There's uncertainty about the continuation of the OPEC cuts. We still continue to see shale output increasing, albeit we see, for example, the rig count stabilising. So I think that there is certainly a scenario where the oil price comes off a little bit during this year, I think that there's a little bit of caution within a window of say 60 to 70 going forward.
Now, I think an important question is how permanent is Layup? You indicated that some 26% of the fleet are laid up. There's 11% idle. How permanent are those figures?
Yeah, good question, and difficult to give a firm answer. I think the situation is very grey. I spoke in the conference about the various issues that we were looking at Clarksons Research to try and give a framework for that decision. What's the age of the boats in layup? What's their engine? What's their survey position? What's their class status? How long have they been in layup? I think that there will certainly be some reactivation of boats from layup as we go forward into the next phase of the cycle. Clearly there's a lot of focus on the elderly assets and where that cut-off comes between reactivation potential and not. Again, I think it's a feature of the market that will play out over the next few years. It's something we're going to be monitoring very closely, but it is a very grey area both in terms of cost and the potential for reactivation.
It's very interesting to hear from Larry Rigdon, Tidewater, saying that he expected, following their restructuring, that vessels would start to enter layup this year, and probably with increased speed because of the write-downs that they've been able to complete.
Yeah, he talked a little bit about that, and also about the potential for scrapping some of their boats, if I recall his comments. And scrapping is something that certainly has increased in this particular part of the cycle. It isn't quite as an attractive economic position as, say, scrapping a bulk carrier or a tanker, where you can get $450 per lightweight, take that into India or Bangladesh or Pakistan, and it's economically a reasonable return. I think in offshore, there's obviously a lot less steel content, there's the repositioning costs. So the economics of demolition are not as persuasive as for larger vessels. But we have seen some demolition, and I think we'd expect that to continue. I think the point that Larry was making is that it does very much depend on your debt balance sheet position on an individual asset basis, how able you are to make those type of decisions. But certainly we would see demolition, and also this concept of scrapping in situ, where boats are laid up for such a significant period of time that it becomes uneconomic to bring them back, or you would need a very, very strong market. So I think we have to be realistic that some boats will come back from layup, but equally realistic and also monitor very closely those that won't.
What I found striking and perhaps ominous is that there is this stranded order book in China, and 50% of that order book has actually got delivery dates attached to them, implication being that we're going to have an influx of yet more tonnage into the market.
Sure. Well, I think we have about 340 OSVs on order around the world, and the majority are in China. I think the statistics we had is that over 50% we have a confirmed launch date for. So that means that they're at a very advanced stage of construction. We've also been tracking the length of time that those boats are in the shipyards, because, of course, the longer that they stay in shipyards, there will be a range of maintenance schemes going on at the shipyards. So, I think there is, again, certainly potential for some of these boats to come into the market at some point. It's another grey area. How long will it take? How much will it cost? Will it be all yards? Will it be certain types of designs? So again, it's something we're monitoring very closely. But as we move into the next phase of the cycle, it's going to be something that is an important part of the story. I think delivery-wise, we picked up on 90 OSV deliveries last year. We're running at just under 10 a month at the moment. And I think if you looked at the history, we were running 30 to 50 deliveries per month if you go back to that period prior to 2014. So, there has been a correction. There is some potential for boats to come back into the market. I would expect that to be a relatively drawn-out affair.
You mentioned the next phase of the cycle, and you expressed a lot of optimism around the floating, the FPSO, the floating LNG, and this in your mind is where new opportunity lies for the industry.
Yeah, that was a comment perhaps for some of the suppliers and class and flag in the audience. Production is interesting because it doesn't go into this part of the cycle with as much laid up and stranded order book as the OSVs or indeed the rigs have. So it goes into the market, into this phase of the cycle in a much more calibrated sense. Also, as we talked about in the presentation, with the higher oil price, the lower costs, we talked about a statistic of over 70% increase, or $76 billion of FID, over a 36% increase in FID year on year. That again is good for the production story. So yeah, I think we're optimistic, and indeed last year we have already seen an increase in the number of awards made for FPSOs. There are still challenges around the financing piece. There are challenges around the break-even costs of fields. FLNG is still a relatively untested technology, but we do now have working examples. So I think it would be fair to be optimistic about the continued flow of FPSO awards and new buildings as we move forward in the next couple of years.